Momentum trading is the same, and options are the same, except now you're doing with a higher vol base, right? So how do you manage around that? What scale do you have on, right? Collateral management. And that's really what we're looking at Abra. We're looking at what firms have done in TradFi and applying it to our own books or applying it to our own strategies. And then with the OTC operation, it's kind of, it's kind of just like client coverage and kind of working with them to understand how a sell-side firm would work.
Hey everyone, thanks for listening to another episode of Derivatives Decoded. Today, I have the honor of chatting with Bob Wallden, the head of trading over at Abra. Welcome, Bob.
Thank you. Thank you, Ash. Thanks for having me.
Appreciate you coming in and sort of having a chat. I wanted to maybe, kick off things with you introducing yourself, talking more about like what Abra does, what do you do there, and then maybe we could, shift a little bit into how did you get into crypto?
So I am the head of trading for Abra. I've been there now for approximately 2.5 years. I took over as head of trading, came in more of a BD role initially, then took over as head of trading in December of 2022. I oversee our OTC spot trading operation, our OTC options operation, as well as our DeFi principal risk team, which is always interesting to see what they do and how they interact with the market. And that's kind of how you and I have kind of connected with our options offering that we've been building out with Bohan, who's our more recent hire on the team.
Absolutely. So how did you end up at Abra? Like, what was the story there? Maybe tell us more about like your career in general. I know you've worked quite a considerable amount of time in TradFi.
Yeah, I mean, for me, I've always wanted to, as my background, so I'll start from the origin story of how I started. So I knew from a young age I wanted to go into trading. Basically, when I was in high school, I said I want to go into trading. So what was my path? So I wanted to see everything trading had to offer. So I went in and interned at hedge funds, actually interned on the stock exchange floor in New York and NYSE to see everything. So I did an internship at a SAC spinoff. I interned at Soros, got the job at BNP Paribas on their FX desk after Soros, which makes sense because he broke the Bank of England. So it kind of is a logical progression. And that's when the quantum fund was like the fund to be in, if you were a macro investor.
And you were on the front office? I
was on the trading desk over there. Yeah. So that was obviously a great place to kind of be and see what they were doing and how they interacted with markets. So then you go into foreign exchange at BNP Paribas, which is a French bank, which has a lot of it has a long network of European, Middle Eastern, APAC, kind of like functionalities, right? And so, seeing the FX market through an international bank is ideal, right? You see all the workflows, customer types. It's very intriguing. It's truly global, in that respect. You're interacting with all the central banks, and you were kind of at a young age, at 22, thrown into those conversations with central bank execution desks and how they were executing things. So, I've always been intrigued with trading, but then you're trying to figure out the next step. How do people make a decision around trading? So why do people interact with markets? What are they looking at? Interest rates, equities from there. And then, did that for about 6 years, mostly was doing operating on the prop side for them. But at that time, they were building out their e-commerce offering. They didn't have one initially when I started. So help with their e-trading team and their quant team build out their e-trading offering at BNP Paribas. Before, at the time, DB was number one in the world for foreign exchange, both revenue and I'd assume margin as well, but revenue and volumes as well. So they're number one for volumes. Went over there, very similar type of role on the prop side / market making side for them. Got to sit next to that desk, see how they interacted with markets. Obviously, that was heavily algo focused.
This is all US based, right? Were you ever stationed?
No, I was always US based.
Okay.
Except for when I go over to cover the Eurodollar seat at Deutsche. And so, in general, that's kind of how I came to see markets, and then went over and traded for a firm out of Chicago for 8 years, mostly on the global macro side, as a PM, just trading my strategies, and then started looking at things on the crypto market because I am, and we've highlighted this and discussed this, I'm a momentum trader by trade. And so, initially when you're a trader, you're trading kind of like, okay, I could trade every day, right? But as you realize, your stats start to go down. So I'm a big believer in statistics around each trader. So every trader at Abra presently has a Sharpe hit ratio, performance ratio, and some type of drawdown metric around their P&L. Every trader has to have that. We don't hire execution traders. And for me, when I looked at the digital asset ecosystem, I said, I can trade this. It reminds me of trading when I first started in 2006, trading prop versus, trading in 2018, 2019. It's kind of like a vol grind lower in the FX and global markets.
Yeah.
But I looked at crypto and saw it as an opportunity set to really jump in and see how these markets perform and see what other strategies are out there. And as a trader, I feel like every trader wants to know what everyone else is doing.
Of course.
Right? So if we do basis in crypto, basis exists in TradFi. It's just different, it's kind of just built a little differently, but it's the same idea.
Yeah.
Right? And momentum trading is the same. And options are the same, except now you're doing with a higher vol base, right? So how do you manage around that? What scale do you have on, right? Collateral management. And that's really what we're looking at Abra. We're looking at what firms have done in TradFi and applying it to our own books or applying it to our own strategies. And then with the OTC operation, it's kind of just like client coverage and kind of working with them to understand how a sell side firm would work. So I kind of look back at my BNP and DB days, how we interacted with clients back then and what they were looking for. And so it's been a really interesting progression, and I think it's still an evolving ecosystem where they look at this and all these little things, all these little details, in trading, as long as I've seen '08, I've traded '08, I've seen 2010, which people don't really like, the European debt crisis. Like, I've traded all that. So it's all like that volatility structure is very similar to me, because at each moment, everything's a 50 vol asset at that one time. So it's managing around that, but also saying, okay, guys, like, yes, USDC to peg because of Silicon Valley Bank or Silvergate. And then, okay, well, we know how to manage this type of volatility structure because we've seen banks kind of collapse before in '08 and how we managed it. One of my more interesting kind of like stories as a young trader was, I remember being on the desk at BNP Paribas and actually taking credit away from Morgan Stanley because we were told that they were going to go under in 24 hours.
Oh, wow.
So, I actually remember that moment. So for me, like, a bank going under isn't a big thing because I was actually on a desk and we were pulling our credit from Morgan Stanley because we were told they weren't going to exist. So we didn't want to trade with them anymore. So it's very similar to like, okay, can't trade with a Genesis or except there's a lot bigger scale because Morgan Stanley was a real bank.
Morgan.
A real bank that still exists. But like at that moment, we did not trade foreign exchange for those 24 hours in Morgan Stanley. So I think that's a value add to see as much, but I also think it's like, I still have a lot to learn on the crypto and I know my DeFi team knows, hands down, more than me, but like it's all evolving, right? And I think it's intriguing.
There's a lot of substance in what you just said, because honestly, I have like 100 questions that I could ask, but I want to start with, you mentioned a lot of like dealing with a lot of these like crises like in TradFi, right? Like, '08, 2010, dealing with issues where counterparty risk can be crazy. And one of the key components that perhaps you and I are very aware of, like just coming from TradFi, is like the maturity of the infrastructure and tooling and sort of clear standards of how to do things and sort of react in time. It's there, right? It's and also when you talk about the shops that you were at, right? Like, these are monstrosities, right? Like, there are very large shops that have incredible resources to be able to interact and react when something does go wrong. How does that feel now that you're when you start at least moving into the crypto space? And it sounds like obviously momentum is where you are you always gravitate towards, but you quickly start realizing, and I'm guessing that's in the early days, I was like, well, that's just not enough, right? How can I actually act on that momentum in the same level of accuracy, speed, right, standards? And then all of a sudden you realize like there's really not much. So maybe walk me through sort of that paradigm shift of from coming into a very structured world that has its so-called shit together, right, to a world where sometimes you don't even know who you're talking to, right? Like when you're trading OTC, right?
Yeah, it is intriguing. In TradFi, they assume, okay, there's some smoke, but like it'll figure itself out because there's a central bank behind it, right? In crypto, it's like, okay, if there's smoke, there's fire, just get out.
Yeah.
Right? So we kind of view it from that perspective.
Yeah.
And I learned that, I'm always looking at the sentiment around stuff. So like, from my experience, it's kind of like, if there's smoke, there's fire, like just get out and move on, and then like take the L initially, or like adjust your collateral procedures right away, and then adjust, in time, revisit as you have that conversation. That's how we've kind of identified things at Abra right now. Like, we're kind of in the, okay, if there's smoke, there's kind of fire right away, and we're looking to move collateral and move positions around, at that moment, and then reassess. I think now, it's slowed down a lot where we actually can think about things and kind of understand, okay, who's our QC, or is there a CVA account here, or where's our, where are we posting assets, and really kind of, and then build out we're building a lot of internal tools around that as well. And that's actually helped us. So initially we're always in the smoke, there's fire, but now we're kind of like, okay, let's have a conversation. And it's a lot more relationship based than it used to be.
Yeah.
And crypto moves very fast, which I like actually, because one, in TradFi, you actually don't learn all the back end stuff, right? Now in crypto, we actually learn everything. So bank accounts, how things are funded, how long does it take to send a wire international, all these little pieces that you didn't know about, and now you build tools around it. And then on the option side, okay, I'm posting collateral here. How long does it take on chain to move that collateral? That's an issue right there. There's market risk around that. Okay, how do we solve for that in the interim with the counterparty? Okay, who are we posting it to? Are we interacting with the paradigm? Are we interacting with just OTC direct collateral movements? All this stuff comes into play, but I think as a manager, I need to be not in the weeds 100%, but fairly in the weeds to actually understand it. So when we have conversations with our client base, they're also aware that we know what we're talking about too. It's actually great from an individual standpoint to actually learn all of it, because I think when the conversations move up to more institutions, we've been seeing the level of conversations really escalated drastically, where they're asking for all the in the week conversations, and now we can, actually answer them. And so, yeah, I mean, a lot of it is still being built, but I think, as you said, it's the collateral movements, it's working with the right firms, it's having those conversations with the right people, making sure the right people are on the calls, and then also just building internal tools to actually, measure that. TradFi has a lot of people, but it also means that everyone assumes that everyone else is going to help them out. Like there's more checks and balances on stuff. In crypto, there isn't, because they're just not as big, firms. But
it's kind of all on you, right?
Yeah, it's all on you. Yeah. And I think it takes a certain type of person to go into that ecosystem. It's someone that wants to be like an owner operator. But that's about hiring, and in the end, hiring is kind of critical.
So maybe walk me a little bit, like let's unfold this a little bit, right? Like when you compare Abra to some of the other institutional participants in the space, right? Like I don't know how would you guys sort of classify yourself, right? More of a liquidity provider, more of a there's maybe a separate like prop operation. There is a retail facing sort of arm. There's an institutional facing arm, right? Maybe tell me a little bit more about how would you guys classify yourself? Mm-hmm. And then sort of some of the other institutions that are out there that you interact with and how you classify them, right? Because I think it's important for some of our listeners to start understanding like how do the institutions operate in the space, right? Because, you and I know, right, there's still a lot of question marks around like, so who is an actual prime broker, right? Who is like all these questions, right? And I think it's important for you to educate us a little bit, like how do you look at this space in terms of participants and where do you guys fit in that puzzle?
Yeah, so Abra itself initially started, I believe 2017, 2018 by Bill Barr, our CEO. Mm-hmm. Initially started as an app where you could buy or sell like, let's say 100 cryptocurrencies on the app. And it was mostly retail facing in that respect. Around 2022, they built out this institutional offering where they were going to start building a trading desk that could face true institutions, offer trading services, right? Initially just spot, but they always wanted to do options as well. And so when I took over, I kind of looked at the ecosystem, what we had in place at that time from a trading infrastructure standpoint, from people standpoint. And we eventually said, let's really go build it, And so in my mind, I wanted to rebuild what Deutsche Bank had, right? I viewed that as like the premier desk to be on, right? It serviced all client types. It never said no to a trade. It had an immense balance sheet. So that was, well, I guess not as immense as JP, but in general, because DB stock never got away from 10. But like in general, I wanted to build towards that. It had a great trading desk that all eventually went on to, working at hedge funds and buy side and managing billions of dollars capital, right? Mm-hmm. So, that was my end goal. But right now where we are is like we offer spot options, credit on our trading, margining around options. And we do, view ourselves as a prime brokerage offering. On the Abra Prime side, we call Abra Prime, which is basically like a global markets offering. There is another vertical called Abra Private/Treasury, which is an SEC registered RA that offers BTC yield, Solana yield, Ethereum yield, as well as custody and trading and borrow. Mm-hmm. We view ourselves now as almost kind of like a global digital assets platform, right? So we have the Abra Prime, which is what I oversee, and Abra Private. And so a true prime broker is someone that offers credit out to, after a credit diligence process, offers credit to, let's say, institutions to be able to trade.
Yes.
Right now, there is really no true prime broker in crypto just because the balance sheet required is large. But there are firms that do offer credit here and there to certain opportunity sets, Abra being one of those firms, and obviously has a credit due diligence process around that, and just is about measuring opportunities versus what they have on balance sheet. Mm-hmm. And that's how we've operated. And then on the option side, it's about margining, right? Are you offering 100% margining? Are you offering 30% margining? And I think it just comes down to, again, relationships, trust, due diligence process, and kind of facilitating the right business. A lot of our, let's say, peers in the space are doing stuff pre-funded, but in terms of like efficiency for collateral management, a lot of firms are moving away from that because they can earn better yields by kind of adjusting their margining, right? And I think it's going to get there, right? I think just firms will eventually kind of you'll see firms merge together, realize that they have to migrate balance sheets, and kind of come together as either a trading team with a custody offering, and then say, okay, let's do this together. And now we can offer a better product versus our peers. Right now you have Falcon X in the ecosystem, Galaxy, obviously in the ecosystem, your prop firms like your DRW/Cumberlands, your market makers, which are Wintermute, Laser Digital has come into the ecosystem. You have DV Chain. Abra is not a market maker. We don't have a market making team. When I view a market making team, I view it from like, okay, what DB had. They had a market making team that, you could, trade currencies on. BNP, all investment banks had market making teams.
Yeah.
Abra itself will eventually go down that route and probably build out a market making offering where we could be an LP. But I think it's part of the process, right? So I think Galaxy itself does have a market making team and does options. I know that's part of my, roadmap for the team is to have that. I think that's a full service offering, kind of an investment bank offering to do market making options and spot. And that allows you to warehouse stuff in house. And we do have the ability, being a principal desk, to warehouse positions. I think in the space, not so many people are directional yet where you have to worry about that. But in general, that is the worry, medium term, where there are clients that come in that are directional and move markets, instantaneously. And I think there are no market makers out there that really want to face those clients because, no one wants to lose money right away. But in TradFi, that happens very frequently. You lose money on a trade right away, and that's part of doing business. And my options for Bohan, we've spoken about that. There are some trades you just lose money on right away, and you know that from your D Shaw. It just happens.
Yep.
You can't.
Pretty normal.
It happen. I mean, it happens. And I know as a trader, I lost money at $400,000 on a trade once.
Yeah.
And my manager said, well, okay, go make it back. So I think that's kind of like where the ecosystem is. It's growing where like when you have the balance sheet, you have the ability to offer credit, you can take a loss. That's a true prime broker. That's a true model that eventually digital will get to. But right now, it's still like figuring out how much it wants to.
It's very brittle, right? Like that's the problem right now.
It is, but the technology is excellent.
Yeah.
It has a really good, subset of people and a really good subset of managers. And I think the ecosystem's really matured a lot. I think all the conversations we're having are very mature conversations. It's just about a lot of terms are thrown around prime broker. Like a true prime broker is offering true credit and really backstopping the counterparty credit risk.
Of course. Yeah. I mean, clear collateral management, right? And obviously like one of the biggest issues across this ecosystem in general, if you think about it, is just like cross margining is not really there yet, right? And maybe I want to touch a little bit more on that, right? But before I go there, I'd love to get your thoughts just more about like liquidity fragmentation in general within the space, right? When you think about all the different exchanges, right? Like all the different trading on screen that you could be doing versus all the OTC flows that you could be doing, right? Maybe give us a little bit of your understanding of like where is institutional capital today, especially on the option side. Is most of that happening OTC? Is most of that happening on one single venue that starts with a D, right? And then how do you see the future sort of evolving there, right? Especially with news coming around that, options on ETFs, right, are going to start getting approved and hopefully, being traded on regulated venues here in the US sometime in 2025. How do you see that market sort of evolving? And are we going to continue still seeing crypto native liquidity on crypto native venues just driving the roadmap?
I think it's an interesting question right now because I think so much of it depends on what happens in 3-4 weeks. In my mind, what drives everybody to different markets is money.
Yeah.
Right? And so in the end, if you look at a crypto market, a digital asset ecosystem versus a TradFi ecosystem, it's like the spreads, right? Mm-hmm. How much you can make on a trade. Right now in crypto, the spreads are wider than in a FX market, right? Yeah. So once there's regulatory clarity, you'll see, and I've had conversations recently with DMA type, algorithmic trading firms that do, let's say DMA trading for fixed income that were intrigued by how much the spreads were in crypto.
Yeah.
And so they're like, okay, that's intriguing me. I'm going to start looking at that and speaking to exchanges so we can go DMA into and so I think that kind of brings the conversation to a new level. When they see the opportunity set, all of a sudden you see new players enter the market. Mm-hmm. Once there's regulatory clarity, all of a sudden it's the next step, right? Now you're just like a couple months away and they figure out how to come into the ecosystem. We've been getting, pinged about new participants, but again, that exchange with a D is still number one. It's number one, right?
Yeah.
And that still is the leader. Now, is there OTC off-exchange direct trading going through? 100%, because if you're trying to effectively mask your trading, you're not dealing, through a paradigm. It's going to be done direct, right? And then posting collateral. That'll be kind of what people would do. In the end, it's about minimal market impact for all these, for any real big trade, right? So you don't want to be going out and showcasing your hand to everybody. In TradFi, people are taking down large quantities of trades and they don't want other people to know about it. But in the space right now, you kind of need to have like something done piecemeal across the entire ecosystem. So I think in 3 to 4 weeks, depending on what happens, it's going to be a new conversation. And from there will be another conversation in 6 months. And I think in 6 months, 7 months, you'll see different players coming on, depending on if Polymarket's right.
Where do you think that's going to go? If you had to guess, I know Polymarket is saying somewhere, right? But just, I obviously you don't have to, specifically mention a candidate if you don't want to, but I'd love to hear your guesses as a trader, right? Over the years, you've built this gut feeling about where the wind is blowing.
Up until recently, I still thought it was former President Trump's to lose. So, it's,
Yeah.
I think it's kind of clear now. I kind of have the impression of late that he will pull it out. I had an impression with Brexit that was going to be Brexit. And so, was biased that way as well. And actually did trade the initial 2016 Trump trade. So I, had that impression back then too.
Okay.
I've always been 50-50. This is just from a more of a trader standpoint, not a personal standpoint.
Of course.
And I think a lot of that is, I think it's so weird, such a binary outcome for crypto, but it is kind of like that's the outcome. And personally, I love binary options. So like, I kind of like what the opportunity set is right now, and I like where I am from a career standpoint and where my team is placed and what we're trying to build, because I think if it's perfectly set up for if that happens, it's going to go that direction. Will there be new firms that come in? Possibly, but I think they'll also need to look at the crypto natives to actually understand the market better.
I mean, have you seen the recent report that some of the Galaxy folks put out around like the difference between both candidates in terms of like their policy around crypto in general? I mean, maybe you haven't seen it specifically, but I guess the TLDR is that maybe Kamala is not the worst thing in the world. It's obviously worse than Trump for the industry altogether. But I did want to get your thoughts on like, how grim is the alternative, right? If, the candidate that is less supportive to the industry ends up being in office, do you think we're going to get into another winter here, right, for a while?
I mean, there's discussion around, I think in my mind, it's also about funding too, right? So if there's a certain party in the White House, also funding may dry up for a little bit as people kind of understand the ecosystem. That kind of helps out build out new projects and build out new kind of service providers, right? So I view it from that perspective, right? Because if people understand there's some sort of regulatory clarity as well as a more positive impetus from the White House, then people say, okay, maybe I'll make an investment here. And then it kind of allows things to build upon itself.
Yeah.
I don't know. I always like the simplest answer is usually the right answer. So I think there's just like one clear candidate and the rest is just like, okay,
whatever.
Whatever. I don't think Galaxy is wrong in any way. I just think it's playing nice. I think it's like, in the end, it's like, where's the money going to come from? It's going to come from VCs investing in the space to help projects, build out and service providers, and then look at new platforms that are going to allow people to access the ecosystem better. Right. And I think if Kamala is in, I don't think they come in as fast. And so I just, from black and white perspective, I mean, do I think that, you could go down a rabbit hole with this one is my, so
yeah, you're absolutely right.
There's a custody rule. You could say a custody rule around who's in banks versus, other providers providing, like you could go into all the nitty gritty around it. But in general, I always am like a black and white type of person around what the answer is. And I think it's rather, I take the easier route here.
I agree with you. And I think it's definitely a binary thing, right? I don't think it's a soft landing kind of situation, right? I don't think that's going to happen. I think one candidate clearly is much worse to the industry than the other. I don't think that specific candidate, no matter what they say, right? It's an administration, right? It's not really a person that gets.
No, exactly. But they also dictate who's in power for certain roles, and that all helps out. And then also, I have to look at it from a personnel perspective, right? Yeah. So if the people we've hired and the people you've hired are like, okay, I don't see the end game here, and they start, then the quality of goods suffers, right? Yes. And so in the end, people are motivated by, the opportunity sets. And so, even if you have someone that like, okay, maybe they are friendly if she wins, okay, but then you still have people that don't believe that, and so you have to keep them here. So it's like motivating your people, right? In the end, we're managers around our businesses, and it's tough because it is only as good as the people we have working for us.
Yes. Maybe let's get back to cross margining, right? Yeah. I think that's a huge pain. Obviously, I don't even need to tell you that, right? Like being a head of trading, you know exactly what I'm talking about. Maybe let's simplify some terms to some of our listeners. Like, what is cross margining, and how do we get there, right, for this industry?
On cross margining, it's effectively looking at holistically a book of business or our portfolio and assigning margining across the broad spectrum of different strategies we have. Yeah. Right. And so effectively, if we had to dial it down, it'd be basically looking at if we had one portfolio where we had our DeFi strats as well as our option strats in there, and let's say perps hedging across the entire thing, and we could just effectively use our collateral for all of them. Right. And then when it's not perfectly, if one team is using its collateral more efficiently, then the other team benefits, right? Yes. And so very much like a true prime broker model where like you've got equities, fixed income, and let's say FX, because I always go back to it, like in general, you just margin around a net number. But in crypto, it kind of is broken down by subsets, right? And so I think as firms as you have a true prime broker, they're allowing people to cross margin across, let's say, spot options And then from there, they can obviously be more efficient with their collateral, and then they all deal with that one firm. All the clients we speak to want to deal with a one-stop shop for everything.
Yeah.
They actually, well, in TradFi, they kind of view it from counterparty risk, where they want to have 5 counterparties, like the big real money names. Most of the firms we're trying to interact with right now are saying, I just want to do one-stop shop for everything. So I can speak to you about spot options, and then like, let's say credit opportunities or, special situation stuff.
And give me access to all the liquidity venues that are out there, right? So it's not just like...
Yeah. That and all the tokens they can, everyone's looking for 500 plus tokens that they could trade, and that's what they're looking for, right? So, BTC and ETH are commercial. I mean, I don't have any question. I don't have any discussions around anything around BTC and ETH anymore, because those are kind of like the euro dollar and dollar yen of crypto.
Yep.
So like deep liquidity to me is like, everyone has deep liquidity. That's not
super blue chip, right?
Super blue chip, right? Yeah. But everything else is very different, right? Yeah. So I think that's what a true prime broker would do with the cross margining. I think it has to be built either in-house or by new tools. And I think we will get there within a year on those systems. But again, it's a work.
You think it's going to take like one party to be able to pull that off, not more of a coalition of people to come?
I've heard it should be a coalition of effectively a bunch of QCs that effectively do, and then effectively plug into all, and then you can work from there.
Yeah.
I just think right now, I think firms all believe they could do it themselves, but I think that would be the better solution.
Mm-hmm.
It's just really about people coming together and recognizing that, right? Everyone's trying to build, like there's a lot of firms that do OTC spot.
Yeah.
Do they need to be? No, there could just really be a couple, and then they all work off each other for different offerings. I think we're gonna get there. It just comes together as people realize that's what they have to move towards.
Well, with that comes a lot of pain, right? Until we get to that point.
Yeah.
And I'd love to learn more about how are you dealing with a lot of those pains at an operational level, right? When you got multiple different risk sort of portfolios, right? Multiple different risk metrics that you need to be able to meet at different asset classes, depending on whether you're touching DeFi or CeFi.
Yeah.
How are you doing that today? And how are you enabling your team to be able to actually explore, other counterparties, deploy at scale, and be able to sleep at night?
On our DeFi team, we're always managing LTVs and very conservative LTVs. We've been running a market neutral portfolio for almost 4 years now in that space, and it's been managed through various volatility structures. So we feel very confident with the team, and as well as how they've managed around their LTVs. And we have built-in alerts, and we have built-in internal controls around their LTVs, and as well as their present, perps structures. And that's been working for us for a number of years now. We also have around options, we've built it as well. Everyone seems to be building internal tools, right? It's mostly the algorithms around the hedging and the gamma trading that is more new for us, right? But in general, we built a lot of internal tools to track both, where our gamma risk is, as well as, what are our risks for our portfolio medium term. So we're always looking at what is our tail risk right there. On the spot side, it's a little different, because that is really just internal credit control metrics with our LPs to kind of manage around that, and then running a 24/7 operations team to also keep a track of all this. So when we're having to move any collateral or top up any collateral, we always have the 24/7, 365 operations team that can manage that internally. And so we do use some outsourced tools on the spot side, but then have more internal for the DeFi and the options. But again, it comes down to people also managing around LTVs, managing around their portfolio. And then when you have a volatile asset class like this, just effectively scale, right? So just being aware of that.
But one of those things that I'd love to maybe touch on a little bit more, right? You mentioned there's a lot of people out there that do tend to build some internal tooling, right? To be able to actually continue operating. How easy versus painful the buy versus build, at least from your experience at an institutional level, right? When you think about at the end of the day, your number one role is to, generate returns one way or the other, or sort of, be able to be a strong counterparty against who you're trading against, right? And you're not necessarily focusing on the technology as much and maintaining that for years, right? So you might skew more towards the build versus the buy, but I'd love to learn from you, right? How do you look at that formula, especially in a nascent market like this?
I think on the buy side, I would personally like to just buy if it was applicable, but it's not there yet. So you almost migrate to build just because you're saying, okay, it's not fit, it's not built the right way. We are starting to see some service providers come out there that have built for the right way, but even still, you'd be surprised, you would think these brand names they have only been around for like 1 or 2 years in that space. So they're still learning in real time as well. Or they built tools for a lending market, and now they're trying to migrate to a trading market, right? And they're not at that pace yet, right? So a lot of tools were built initially for lending, I felt like, because that was like where a lot of people were gravitating to. Now I feel like a lot of people are gravitating towards trading and options, and because people are, as you know, like options are primarily how people manage risk in TradFi. So now they're recognizing that ecosystem, saying, okay, well, I don't need to build out for the lending side, and we don't have to go into names which firms these are, but like, now they're trying to migrate into trading, and then they're saying there's LTV, we can manage your credit risk on the trading side, but then you just know it's a manual process that they're just getting an alert and just sending it out to someone saying, okay, you have a risk here, right? So I just don't think a lot has been built yet. I think there are questions being asked about what they can build, and then I think it's just really finding the right people to help them like build in real time. Options is definitely one thing where like, okay, people want an API and understand their gamma profile, right? It's not perfect yet. Right, there is no PMS system yet that's perfect, right? So
we're building it.
People are building it, but like, it's still coming around for people, and people are also trying to say, okay, how? Well, and then it's about the user error, right? Too. Some people just aren't as comfortable. Like there are a lot of people entering options markets to trade, but yet they don't know how to use the PMS correctly.
Yes.
So it's also education.
There's a curve there, right? On both sides, right? Whether it's like the user feeling comfortable with using the tool, and the tool being at a position where it's actually providing the value that it's trying to get there.
And some of the exchanges offer tools and get people to get used to that, but really that's probably not the most efficient usage of like how to manage the risk, right?
You're not going to be switching tabs.
Right? No, you're not. And then in TradFi, it's all built internally off like Excel sheets, right?
Yes.
I mean, so like there's another user case where they're used to that, and so like I think Abra itself is a mix of that presently, where we're building these internal tools that are going to be more on like a dashboard that we can manage around the entire business. Mm-hmm. But yet then we also have the other side where we have like the sheets, because the traders are used to that from their TradFi days and managing their FX portfolios. And so those are live sheets. Those are always taking in live data and APIs, but that's just how it works.
All right, last thing I want to talk a little bit more about is how you envision the future of settlement, right? So, and I love to ask this question because I want to hear a lot of people's voices around like, do you believe in, a decade from today, everything's going to be completely on chain versus where we are right now? Do you think that's where we're heading? And if not, what do you think is going to happen, right? Like, it's very interesting to see like how DeFi has been able to maybe unlock some things, but it's still questionable around like institutional risk appetite for how DeFi tends to operate and how they've always looked at markets and their level of control on things going wrong. Do you see a future where every financial instrument is on chain for the entire trade life cycle?
Probably not. I think it'll take time. I think unfortunately there will always be a person in the place that will say like, this can't be done on chain.
Why do you think so? If there's a world where the middleman can be completely obliterated, you still yet believe that that's just not going to happen. What's going to be the blocker for a future where everything is instantly settled, everything is decentralized to some extent, the data, the execution, the liquidity, it's all available for anyone. Like, you could be trading against someone, some OTC desk in Nigeria, and you would never know, and everything happens right then, right there.
That's a perfect world. And the truth is, at some point, when you get into the amounts of money that TradFi would bring into the ecosystem, which they eventually will bring into a tokenized world or into settlement, there will always be one person that says, I can't do this piece.
Okay.
And unfortunately, that's just how it works. There'll always be. So it's like, as we discussed before we started, we build to us, we don't build, we won't build to you, right?
Yes.
And I think, unfortunately, people try and change that, but there's always going to be one. I think they will migrate over a decade to a much closer world to where it's mostly on chain, but then there'll be one component that is like one stopgap. And I think that's unfortunate, but I also think just dealing with, when you deal with risk managers, there's always someone that says like, no, I won't make that bet.
As a technologist, this honestly reminds me of the same conversation that I remember early on when I started, my career. So I started my career a little bit younger, right? So I graduated in 2015. And I remember at the time, right, my first job out of college, there were still those discussions around like, cloud or not, right? And I remember like the most financial firms were like, no, on-prem data centers forever. We're never going to touch the cloud. Definitely not like putting our algos in AWS. It's just not going to happen, right? And I'm not talking about HFT shops here. I'm not talking, right?
Yeah.
I'm talking about And there were people obviously still in the room that were like, yeah, it's going to pick up. There's going to be more adoption, but I don't think financial services as a sector is going to really accept that. And, maybe the 5% risk takers are going to take that on and they're going to try to put it on a pamphlet somewhere. And then their clients are going to be like, what? You're managing my money using cloud providers? Like, whatever. That's very different from where we are today, right? Like AWS is showcasing Shaw and Arcesium as one of their biggest clients, right?
Yeah.
I'd read that, right? Like, so I do agree with you that yes, 100%, it's probably not achievable because just that's the nature of everything, right? There are still people riding horses somewhere in the world, right? Yeah. There are not driving cars.
Yeah.
Maybe I'll throw the question back at you. Do you think outside of the parties that by design are like, no, I have to. I'm sorry, I'm old school. I can't.
Yeah.
Do you think technology is going to be a barrier to that? Do you think generally because today, I don't think the tech itself, even the most advanced L1s, L2s out there, right, are at a place where they can actually scale at a global level.
Yeah,
right?
that's
so. But do you think we're going to get there?
I think we're going to get close to it, like at 90%, right? But I think there will always be that one gap, and that's the issue, right? That's why it can't be fully decentralized, right? So I think we'll get very close with the right people and the right shops, and I think that's maybe my only fear is that you won't have the right people in for about a decade, but you will get there, right? And I think at that point, then we'll see. So maybe we're having a different conversation in 5 years, and I hope we are. But for right now, from what I'm seeing, I think from what we've seen on the private wealth side and saying, how do we build like a total like digital asset, platform that's on chain effectively for people and access DeFi for borrowing and everything, people are like, oh, built to us, but we need to understand everything about it.
Let's get back to the earliest question that I asked you before about like, where do you think liquidity is going to be going, right? Do you think regulated exchanges here in the United States specifically, right, are going to start eating into the Binances, the Derivatives, the OKXs of the world? Do you see in a 5 to 10 year horizon, Deribit and Binance and OKX still dominating crypto liquidity?
No.
You don't?
No. I just think over time, I mean, if someone finds a way to do, I mean, it's tougher with like I think it's tougher like what they're trying to build in Texas with like to compete. That's tough. Like they've just been around a long time and there's been a lot built towards those exchanges, right?
Yeah.
But in general, I think there will be a US based exchange for the digital asset market
that will just gobble up
that people will migrate to and say, hey, let's just take a look at this. And I think that'll just come around. And as long as it's built the right way with the right people and there's just enough promotion internal, and there's I think people just will migrate towards that. Right?
And the right phone calls happen to the right decision makers, right, to start moving flow.
Unfortunately, that's how it works, right? Yeah. And then it's just like people having to use Coinbase for custody, right? For, that's just kind of the blue chip level. It's like using JP Morgan for so much, right?
Yeah.
And that's how it works. And unfortunately, that's what I've seen in TradFi, and I haven't mentioned stories about what else I've seen, but in general, I think there will be a US-based exchange. It will start eating up a small amount of market share, and then eventually it'll acquire one or it'll make some adjustment there.
That makes a lot of sense. All right, let's wrap this up with one final question. Where do you think Bitcoin is heading into next year? Yeah, give me a 1 year prediction, a 5 year prediction, and a 10 year prediction.
I think everyone is the same way. Everyone's kind of like higher, so I don't think that's a crazy outlandish call. I think we've made the call that, BTC would be, at, let's say 80 plus into the election and then like deal 100 and then maybe come back off afterwards, like buy the rumor, sell the fat, because that would be the pain trade because there's some type of a gamma profile up there. That's kind of how we envision it for a 5-10 year horizon. I obviously have to say we'll be higher, hopefully, for my career.
How higher?
I'll give that.
Give me a number you'd sell an option on.
An option on in 1 year?
Yeah.
Yeah, like 125, I think is fair.
Okay.
I think I'd be okay with that.
You and I see $1 million in our lifetime?
I hope so.
Well, obviously, right?
You know what? I actually find it. So I view it from this perspective, right? Mm-hmm. So I actually view it. It's almost breaking out a little bit now, but for about 5 months, you didn't have to do anything. Yeah. There's no trade. Right. And I think we brought this up, Bohan and I, on another podcast, yes. Right? So we said, like, there was nothing to do, and that's kind of the good sign of a trader is to say, okay, there's nothing to do, there's no new catalyst. And so I believe that in any trade, in every single trade I've ever done, there's always a catalyst, and then it goes a lot further than you expect, and then that's how it works, right? with COVID, during oil down to zero, whatever it was, right? All these things. So everything can go a lot further than you can expect, which I don't love selling options for. I like playing the other side and buying it, and then you buy as much spot, as much optionality as you can, and then let it roll off as it goes through.
Yes.
So could it hit $1 million? Possibly could. There might be a trigger there. Could be BTC as part of the, central bank reserve, portfolio. Then you can't say 125. You have to say, okay, well, what is it really worth? Because liquidity will just dry up, right? And so from that perspective, it's different. I think at that moment in time, we'll recognize that, and we may be saying, hey, that's not enough. So I don't like to put a big call out there.
That makes sense. Sir, it's been a pleasure. I think I don't even know how long it took us, but it felt like I don't think we had enough time, honestly. But I could go on and on. But I really appreciate the time, Bob, and looking forward to hearing more from you and on the same podcast and other podcasts as well.
All right, thank you very much, Ash. Thanks for having me.
Appreciate it.